Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I am your host, Whitney Sewell. Today, our guest is Vinney Chopra. Vinney's been on the show numerous times. He's added tons of value to our listeners over the last few years. We've talked about many different parts of the syndication business, multifamily, senior living. And now today we are going to discuss some new things he is moving into and bringing into his organization. And one specifically, senior living, and how he's operating a fund. Just some pros and cons of the fund that you should be aware of. More pros than cons, I believe personally, but also as an investor, but even also as an operator. He goes into details about those. You know, someone that reaches this success that he has, over $500 million under management right now, with a goal of, I think, $2 billion in the near future, and he's definitely moving towards that in a fast way. You don't get there without some great processes and systems in place, and also a great team. He highlights that in a big way during this interview. I hope you enjoy the show and learn a lot from Vinney today. Vinney, welcome back to the show. I know the listeners know who you are. I think I was just sharing with you before we got started. I think you've been on the show more than any guest, and you've provided so much value to myself and the listeners. We're grateful to have you back. Why don't you give us a little update? What's happening with you and your company right now? Now, I know there's a couple specific things that are really, big things that are happening within your business right now. I know we're going to jump into today.
Sure, Whitney. Thank you so much. I didn't realize that I was with you on your show 10, 11 times, you mentioned. That's exciting. But no, a lot of things have happened in the last 14 years. 14 years back, I bought a duplex. Hold on. Duplex, and then 14 units for $180,000. And now we are into almost $500 million. And the two markets which are really, really exciting right now is, of course, the millennials. The millennials, everybody knows there is a big tsunami going on, I call it. Portability. They don't want to buy homes. They want to live in apartments. So that's a big tsunami. We need to ride it with the job workforce. The second one, which I'm very, very excited about, is the silver tsunami. Silver tsunami is where 10,000 people, baby boomers, are turning 65 every night in USA. And it's going to continue that for the next 20, 30 years. So we're going to have 100 million. Are you already listening to me? 100 million 65 plus people. 1/3 of USA population is going to be seniors. And so many more 75, so many more 85, and all the way to 100 years. A lot of people will be living much longer, as we all know.
That's hard to think about. Like 1/3 of the population will be considered seniors, but it's great to see that opportunity ahead of time, right? Like you have.
Yeah, it is. I've been thinking about getting into senior housing for almost 3-4 years. And then I got into it 2.5 years. And now we are really excited to be in the middle spot. I would love to tell your audience, senior housing has 5 different phases. The very first one on the left side, if we took a graph, is no need driven. It's just easy, independent living, 55 plus living, 65 plus living, in golf course, gated communities, or condominiums and things like that. That's on the left side. Then we go into middle, which is a little bit assistance needed. And that is assisted living and also the memory care. The right side of the graph is actually very much need-driven, we call it, because it's the nursing homes, the rehab centers, the hospitals, of course. They are need-driven, and the seniors have to go there. We chose the spot in the center where there is no doctors involved. Even the nurse is not involved in our multifamilies, but we do have one nurse, who's there, one during the day, one at night, one over the weekend. So 3 nurses. And then it's the lodging and also giving them the daily activities with caregiving, we call it. which is assistance and memory care division of the multifamily. So we are not in residential either, because my life has been only with apartments, right? So that's what really we found a soft spot of 89 to 92 units, multifamily, with spas and salons and libraries, meeting rooms, chandeliers, dining halls, courtyards, putting greens, you name it. I mean, all the luxuries, grand pianos, you just say, that's what we do. And chefs and junior chefs, they cook to order 5-star meals for our seniors every day, breakfast, lunch, dinner, snacks, all cooked to order.
Sounds like a pretty amazing place, Vinney. Vinney, I mean, obviously senior living is a very different business model than, say, multifamily. I mean, there's some similarities maybe in the property and those things, but the operational component is so different, right? I guess, did you just see the opportunity and think, you know what, this is just an amazing opportunity as far as investing in real estate and that business, that we should move in that direction? Or how did you tackle that?
I'm so glad you said it. Whitney, what happened is when I bought $52 million deal over there in Orlando, and we get 3.5 million revenues, right? For 352 million, by the way, we spent, right? But in senior living assistance and memory care in our side, we collect almost 4,500 to 5,500 per unit. So by doing that 3 times or close to 3 times, you divide that 300 units to 100 units. So for only 92 units of multifamily senior living assistance, we are collecting 3.5 million. Wow. Of course, the expenses are more, right? Because of the lodging, of course, the food and all the other expenses. But overall, the senior living, assisted senior living, especially the one we are in, it performs much better than apartments. And we build them from scratch. That's the best beauty of it too. No elevators, no nothing, 5 to 7 acres of land. We build it scratch, and it's all brand new appliances, brand new everything, A++ community at a very reasonable price. So we don't have any maintenance issues whatsoever. So we cut down on that. Delinquency is 0. Concessions are 0. So overall, it just is a very good business. Yeah.
Tell me a little about the structure. Say, like an investor would say, okay, Vinney, I want to invest in senior living. What kind of, structure should I expect as an investor investing in something like senior living versus multifamily?
Okay, very good point. When I moved my investors, 400 investors only we have, and they bring millions of dollars. So when I started 2.5 years back, I had to train my investors to say, it's dirt when we start the senior living. It's dirt and there's no cash flow. So you will not get any cash flow for 12 months. That was a different thing, because my investors were used to getting them on day one. When we close the deal, their clock starts, clicking, right, with the cash flow. So they were fine with it. But to compensate that, I had to give them higher cash flow, in the second and third year. All right, because we had to compensate for what they did not get in the first year. Right. So that's what the plan had been. And I was able to raise 18 to 22 million very quickly with that plan. By the way, during COVID last year, I raised, right? But now I have a different attack. You might say, Vinney, what are you talking about? So now I have put together a $50 million fund, 506C. It's a 506C, so we can advertise, we can do everything, we can talk to strangers, accredited investors only though, and ask them to invest into the fund. But the fund has a different meaning to it. It pays for the constructions of the senior assisted living, but guess what? We also buying the ones we built and got them occupied. So now they're cash flowing like crazy. So we buy those in the fund, and conventional multifamily in the fund also. and hotels in the fund. So we have a four-pronged attack, which I was dreaming about it for a few months, and now it's reality. We have PPM, we have everything ready. I think out of 50 million, I'm only raising 12 million or so right now. 10 is raised within 3 weeks, and that is for $47 million portfolio. 47 million. One is multifamily, one is ground up construction, their senior assisted living, which my partner is building already. And the third one is already built in Cape Coral, which is 35% occupied senior living.
Wow. So it's interesting. You're grouping different asset classes, but also some development, and some that are already operating, both, different types of senior living and multifamily, all in the same fund. What are some maybe concerns that some investors have, and maybe some pros as well? I've heard, investors ask, from different, they love it or they don't like funds one way or the other. What are some things you've heard that investors maybe really like about this type of fund dynamic?
A lot of investors are loving it because these are different locations. We'll be purchasing and building and buying in just not one sub-market, right? So it mitigates the risk. That's what we talk about. Because once I have done 34 syndications, right? And they have been specific to a product, any location. If that location is great for next 5 to 7 years, the property did well and the investors did well, and they did very well. We were very happy to find emerging markets and all. But if we want to mitigate the risk, fund is the best way, because if one asset is not doing good in one quarter, the other asset will take over, right? Because all the profits or losses of each property, each investment goes into the top, into the fund, and then it pays out. Yes. And the other good part is that we have cash flow so much that this 50 million might become 100 million, by the way, because the equity gain and the cash flow will be much higher. Yeah.
No, I love the geographical diversification, right? Different markets, different asset classes, but also I think a lot of investors don't think about the cash flow diversification. Like you mentioned, you may have, say 5 projects in the fund. You probably have a lot more than that, but let's say 5. And one may be underperforming, but while you may have 2 that are meeting projections, and you may have 2 more that are way above projections. And so that helps that investor to not have all his eggs in that one basket that may be slightly under projection, right? So no, I love the fund model as well. I think what about as the operator, some pros as well? I know it helps you to be more competitive, as well, but what about just from your thoughts about that, Vinney, how it helps you to just operate better as an operator?
Totally, operation wise also, we have vice presidents, we have all different people in place over the years. And now, so senior living is one side, apartments, my daughter is in, John Rusin is in, on the operations side. Our accounting takes care of all of it, then our payroll and all that stuff, right? The other good part, which I would like to mention, is that in the fund, oh boy, I had a thread of thought, which was cost segregation. That is humongous. And our investors love that, because as you produce, you buy brand new buildings, you have a lot more to, write off, right? We call it paper loss, depreciation, accelerated depreciation, or cost segregation. That helps a lot to our investors. Now we got so much coming from different properties, not just one property, but so much coming from everywhere, that their K1 is going to look very, very appealing. Means minus, the rental income or passive income or active income, So that is a big one. And then also people can invest into the fund. This is a very exciting thing. 50 million for 3 years. I just set a limit. Okay, in 1 year, 2 years, 3 years. So the investors have to fill in paperwork only one time, but they can give me money many times after that. So paperwork is only one time, but it continues on, as I'm just raising 12 million out of 50 right now. We'll buy the 3 portfolio items, we'll stop, And then in about 4 months or 3 months, I'll buy another three, and then another three, then another three. So our investors will be able to gain so much momentum because their 100,000 or 250 or 500 or a million would have now bought so many different properties underneath.
That makes a ton of sense. I like how you structured it by you're opening it up. We're going to say 12 million. Here's our plan. Here's the properties. It's neat too that they can know some of the properties, the first properties in the fund as well, right? It's not completely blind. They do know some of the properties and already the markets as well, asset classes. And then you're closing it, and then they'll open it back up, and you'll be able to accept more funds. As the fund goes on. What about just the life cycle of the fund? What's the life of the properties, or, what's kind of the exit strategy as well for a fund like this?
Usually we keep our multifamilies for 3 to 5 to 7 years, right? We will be refinancing, of course. So waterfalls will come as these senior livings get into 90%, 95%. They'll be worth double the money many times, So we're going to refinance and bring the money, even pay back our investors, or ask them, hey, this is the equity coming back. Do you want to reinvest it? So now their investment will be doubled almost, If they put 100, we can give 100 back or reinvest it again after the waterfall. So I have all those things in my mind, and we keep proper records and all, accounting. Sure. It's all Excel. The other good part is the hotels. We purchased a hotel just before COVID, and I have my partners in that, Hilton Garden Inn, and the medical staff of that building, of that town, chose our hotel. Our hotel went double the price after COVID. I cannot believe it. I was just there 3 weeks back. I told my wife, this is the first time in my life I did not have to show my credit card to sleep in the hotel room.
That's awesome. Well, Vinney, I would imagine, many people were scared to invest in a hotel during that time, right? How did you know that would be a great investment, that hotel?
No. We bought it at auction, Hilton Garden Inn. We bought it on December 31st, 2019. COVID had not hit yet. So we didn't know. So when the COVID hit, like February, March, April, we said, okay, we'll be ready. We'll pay mortgage or whatever, right, from our own pocket. No worries, because we were at 15% occupancy maybe. And then we got these contracts, right? So we just got lucked out. But now we are looking at some Marriott Courtyards. We are looking at La Quintas because, of course, with COVID and everything happening, there is depressed, market, but there is a huge opportunity. Remember, whenever there is a sell-off, like yesterday, there was a big sell-off. I love to buy stocks, which are the ones I've been meaning to buy. I buy them. So, it's kind of like that. But it's very exciting time in USA. I know a lot of players are there in the multifamily and all over. It's good for me to just branch out a little bit. And I'm very, very fascinated about that whole, it's a multifamily at its core. Hotels are also multifamily, by the way. You pay at the gate to sleep upstairs, right, overnight. And you can change the lease or the rent. There are 4 rents every night, right? Different rents. And then, so it's a pretty exciting thing. Multifamily, senior living, conventional, workforce, and retirement. Look at that. I'm not chasing jobs anymore. I'm going to the communities where the retired people want to live a very, very beautiful life. And that's what we want to. We want to spoil the generation that has spoiled us. So we want to spoil the, seniors who have.
I think it's incredible, Vinney, the way you've branched out, the way you're adding other asset classes, other expertise to your team, right? And opportunities for your investors. I think it's just smart.
Yes.
And it allows them to diversify, all with you. They already know you and trust you, right? And so, you're allowing them to diversify, within your organization. What was your, say the number one technique in being able to scale in different asset classes like that? Was that hiring, more, people that are expertise, with the expertise in different asset classes, or how did you do that?
It's so amazing. I believe in law of attraction and the abundance and everything. So I've been really meaning that, God, how will I get into senior living? And here I find in my partner a wonderful person who came from Pakistan, Shahid Imran, at the age of 17. And he was selling medical supplies to, the assistants, senior livings and nursing homes. And he would cry at home every night because the pathetic situation he saw right there in Michigan. And he says, I won't even feed Mr. Chopra. I won't feed my dad, mom, the food they were given, So this was very sad. And then he sold his business for millions of dollars. And he started 9 years back, building these senior assisted livings. So actually, I cannot take all the credit at all. I just found a wonderful person through John Rusin who came in my life, and they both went to school together in Michigan. So that's how the networking really makes a big difference. And now we are so excited to be working together in all these locations as partners and things. So I gained, knowledge and everything. And then we are vertically integrated. So we do all marketing, all everything in the assisted living space. And of course, we start from scratch, buying the land. We locked in many, many pieces of land already for the next year. For the next decade, our goal is $2 billion with a B. I mean, it's a big goal, you know?
No, it's
We say,
incredible. Incredible to think about. What was it, $500 million in 14 years, and then maybe in 2 billion, probably over the next few years. I have no doubt, Vinny, just the ability like you have and many entrepreneurs to be able to scale and find expertise and build a team to do it well, right? On that
thank
thought
you.
though, Vinny, what are just some thoughts that you have as far as maybe any predictions for the real estate market, over the next, say, 6 to 12 months?
I would say definitely it's pricey. It's pricey. We won a contract in Knoxville, Tennessee, right? I flew there last week, and we are putting hard money day one, right? So a lot of people, 15 bidders, we won the deal out of 15 bidders. So there is competition out there, but don't go on the sideline. That's what I would suggest to everybody, right? Housing is there. Everybody needs, actually, there'll be more need for rental housing with B class and with the amenities with the millennials. They are loving to, move around now with the COVID. They don't have to go to office and things like that, right? There will be some more constructions coming up with the offices with 2 bedroom in office, 1 bedroom in office kind of thing, set up. Foresee that conversions are happening, but the housing is going to stay. And senior housing is here for a long time. All the projections I've seen, we cannot build enough. Literally, we cannot build enough. There'll be such a shortage for the next 40 years.
Even if that figure of the 1/3 of the nation is off a little bit, Vinny, I mean, even if that's off a little bit, there's still so many. You still couldn't build enough, even if that figure is off. So I know it's incredible to think about that asset class and this potential there and the opportunity you're creating as well. Vinny, changing gears just a little bit. What's been your best source recently for finding new investors?
The biggest thing right now is that we are holding webinars, free educational webinars, and then we are advertising also, as a lot of top, syndicators in USA are advertising. So we got click funnels, we got lead magnets, click funnels, and I met with 5 very high net worth investors yesterday. I didn't know them at all. Five of them. So through the click funnel, they answer questionnaires and things, and then they find out about my books and all, and podcasts, all those things. So investors, just finding and keeping that in mind that you never can have enough investors, right? And then we are also partnering with some other syndicators as fund of a fund. I like to do everything very legal. And that's the fund of a fund. I pay for the legal fee for their PPM and docs, and then they are able to raise and become general partner with us also. So that's happening. That's in the investors range. And then in the brokers, we are building relationships. And of course, with senior living, we don't need any brokers at all because we start from scratch, getting the capture rate studies, finding the locations where people are moving to, seniors are moving, retirement communities. And then we buy the land, we pass the ordinances that takes us 6 to 9 months. So, and then we get construction loans, we build on it. As a matter of fact, maybe I'll send you one or two movies if you want to put links for your, viewers, how we build everything in 9 months. The whole construction
You should
in
send me
nine
that, Vinny.
months.
We'll put it in the show notes. That would be great. I'd love
Sure,
to see it
sure,
personally
sure.
as well. Vinny, someone doesn't reach a half a billion, much less 2 billion in assets under management without some daily habits and being very disciplined. I know I know you well enough to know you're very disciplined about many things. And could you share with us a few of those daily habits that you are disciplined about that have helped you achieve this success?
I will say that, the thing is, you got to set your mind first. Mind is the biggest thing. If you don't believe you can achieve, you won't be able to achieve at all. I know that we have read it, everybody's read it. Being positive, having a lifestyle of abundance and thinking of abundance and just getting up. I'll be 70 next year, 70. I'll be 69 next month, and I'm very excited and passionate every day. And it's not work for me at all. My wife says, "Oh my gosh, we are talking all 13 hours or 12 hours." I said, "No, I'm as enthusiastic right now." Anyway, it's the goal setting, it's visioning, and then making sure that you're starting the day right with miracle morning, exercise, eating right. In the morning, I do all those rituals. And then, I'm making a difference the whole day and moving the needle, I call it, with enthusiasm, with passion. I don't work that much, to be truthful. Maybe maximum, I would say I work 4 hours a day, maybe, and it's just that I have teams of people, systems that, propel your businesses, right? We have 5 companies now. So that way, it's the great people, I would say. People build the companies, the structures don't. Right.
For sure, no doubt about it. You're a great example of that, and just being able to scale to that level. There's no doubt you've been able to build good teams and systems to be able to do that. What about just share a little bit, Vinny, before we have to go, how you like to give back?
I love to. My wife and I have been donating, contributing to different causes all over 35 years. Of course, Food for the Hungry right here locally. We donate every month, religiously from our foundation, which is the same thing. Foundation is like we put 100,000, 200, 500 in the foundation, and then we give out, charity water. We have built schools locally, getting involved in the local as director of the fundraising and things for religious organizations. I just did the charity water fundraiser is going on right now, actually, and donated 5,000 to that cause. And my friends are donating. They work, I think, getting clean water in 29 countries. So all these things, really mean a lot. I think it's not to really brag about anything, but one should always, always donate. I think tilting is so important. God gives you more when you contribute to the humanity and give to the less fortunate, Yeah.
Vinny, I'm grateful for just your willingness to give back to me and just the show, the listeners, and just I've known you for a number of years. And I forgot to mention before we got started, Vinny, that you were my first guest on this show. You were show number one. And now we've done well over 1,000 interviews. And so just want to thank you again for how you've given back to the listeners and myself, over the last few years. And but tell the listeners, Vinny, again, just in case they're just meeting you for the first time, how they can get in touch with you, learn more about you, and learn more about your fund.
Oh, sure. My website is vinneychopra.com. V as in Victor, INNEY Chopra.com. Of course, I have two top-selling books in Amazon, Apartment Syndication Made Easy and Positivity Brings Profitability. My third book is coming out, which is Senior Living Investing Made Easy, very nicely. The fund we have is, again, you could go to vinneychopra.com/invest or vinneychopra.com/ so we also have a, university. I coach every Wednesday night myself. I don't have any other coaches at all, but I coach myself to my students and personal students also. I have only 5 of them. I don't have much time, but that way I can coach them just to give back to the, people should do better than me. My goal is to really educate lots and lots and lots of people. Just Google me, Vinney Chopra.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.